I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in custom strategies. And today we're doing a little bit different where I'm getting asked the typical question that a lot of people ask. And so let's just see if we can answer it for everybody.
What makes ITM trading different from other precious metals dealers?
Wow, that is a really good question. For one thing, we've been around since 95, and there are a lot of new people that have come in. But it's the quality and the caliber of the people that are here. For example, I've been here since 2002, and I definitely have been an integral part in the development of ITM trading, and I've studied currencies and currency life cycles since 1987. I don't know. I'm sure there are other people that have studied this, but I personally don't know them. And so I'd ask you guys, do you know them? And in those studies, though, the strategy that we use, and we have a strategy, the basis of which is the same for everybody, because in my studies of currencies and currency life cycles, I see repeatable patterns. So these are things that happen, and there's lots and lots and lots of data because there's lots of government currencies that simply do not exist anymore. And they all go through these same kind of cycles and patterns. So we utilize this historic patterns to help people create a strategy that puts their best interest first. So everybody here, including me, utilizes the same strategy, but then we tweak it and customize it based upon your particular circumstance and goals and what you have to work with. And that's the way it should be. I don't know how old people are out there, but everybody has different goals. So we work with a strategy to help you put your best interest first, and education is the key. Don't take our word for anything. Follow the links that we provide you to the guys that are in power and see what they are saying, see what they are doing for themselves. So we're an evidence-based strategy. That's what we utilize here. And that's what really makes us different. And we have long-term, it's not just you buy something from us, good luck to you. This is a long-term relationship, and you're part of a community when you join ITM Trading.
When you talk about precious metals as an insurance policy, would you please explain what you mean by that?
Well, according to the Bank for International Settlements, gold is the only financial asset that runs no counterparty risk. So if you're going to have a properly diversified portfolio, everything else that you're doing in there, stocks, bonds, ETFs, mutual funds, annuities, any of that stuff, all of that are contracts and run counterparty risk. Gold balances that out, creates a truly diversified portfolio. So like right now, you have the stocks and the bonds and all of these other fiat money assets that are at nosebleed levels. They're severely overvalued. But a rising gold price is an indication of a failing currency. So you have the spot gold price, which is a contract price, that is severely undervalued. That will flip-flop. So gold, as the great equalizer and the only financial asset that runs no counterparty risks, can ensure that you can recoup your principal. Or, part of the strategy too is how gold can recoup any of your lost income, any fees, any taxes, any losses. So when we talk about it as insurance, since it is also the only financial asset that is accepted on a global basis and has a truly global market because it's used in every sector of the global economy, therefore there's always demand for it. That's really what we're talking about with insurance, because its most important aspect is its ability to hold your purchasing power even over time. So the spot market can make it look however they want to make, it's just contracts, and they can create as many of those as they want to. That's not a big deal. But when you go to the physical world that's used in every single marketplace, the premiums will go up no matter what happens with the spot price based upon supply and demand. And its most important function is to hold your purchasing power intact over time. And it's done that for 6,000 years. So that's how it ensures that you can still purchase things no matter what happens with these other fiat money assets. And by the way, if I'm not clear enough, or if you have any question, go ahead and ask a follow-up question on it, because other people will too.
What can we do if the government decides to, and this is from one of my clients, what can we do if the government decides to punish precious metal holders for being out of the system? Suppose they won't allow us to convert our gold and silver into the digital currency, or allow ITM to buy it back from us.
That is certainly something that is a possibility. But that is also why personally, I do not buy any bullion, which is the new stuff, right? I only buy the collectible gold coins. And the reason for that is that is what the 1%ers buy for themselves. And we can witness that in the ultra rarities charts, that it's at all-time highs, right? Because if somebody, there are coins in there that can go for $8 million, $15 million for an ounce of gold. And anybody that can afford that is likely to be somebody that writes the laws or has the ability to influence those that write the laws. So today, precious metals, people that buy precious metals are being punished. We're paying more in taxes, right? Because they want to encourage you to be in the system and discourage you to be outside of the system. But if they choose to do an overt confiscation, because certainly that is a covert confiscation, as is inflation, then you want, in my opinion, I want to be in the kind of gold that is least likely to be impacted by that, which would be the kind of gold that the 1%ers and the lawmakers buy for themselves.
Didn't they create that collectible gold market?
They always do. They always create loopholes so that the public is the one that loses everything, but they get to keep it. So yes, they did. It was Treasury Secretary Wooden who in 1933 put in that little caveat, coins that were minted prior to 33 having special value to collectors, which was a pretty broad way to say it.
Yeah, but but the coins that they confiscated or recalled in 33 were the Liberties and the St. Gaudens.
Exactly.
So that didn't happen until after they stopped minting them and destroyed the coins?
Oh, no, that was written right in. The difference was in the people's understanding of the laws versus those that wrote those laws and their friends' understanding of the laws. And another great example of that was, I believe it was 1964, when they allowed gold contracts back into the system. Now, you could not convert those contracts in 1964 into the physical metal, which was still illegal to hold more than 5 ounces. But you could buy those contracts. And so did the public know about those contracts? Heck no, they didn't know about them. But those that were in power that knew that a change was coming, they were the ones that bought those contracts, held them until we saw spot, go up and it was legal to own the physical again. So who's always the ones that benefit? The ones that write the contracts and write the laws. That's the side I want to be on. Everybody else gets to do whatever they want, but that's where I'm comfortable.
How would you define bullion?
Anything that really, it's defined as anything that is minted after 33, although you've got some caveats in there. So the easy way to do it for me is look at what you can hold inside of an IRA. And if you can hold it inside of an IRA, it's bullion.
So that means that people that think that gold coins are not bullion, if they were minted after 1933, they are considered gold bullion by
They are.
powers to be.
Yes.
Okay.
Although there was a little caveat that President Kennedy wrote in when he wanted to import a lot of gold coins. So I'm comfortable with those things like Swiss francs, but pre-48, because they minted a lot of, restrikes after that date. So pre-1948, British sovereigns, so the early gold coins have a similar level of protection, and you cannot hold those in an IRA. So those are in a different collectible classification, and that's what you want to be in.
When my fiat money becomes worthless, how will I be able to use my gold and silver during that time?
So, there's different kinds of gold and there's different kinds of silver. But when your fiat becomes worthless, there will be some agencies like government agencies, state agencies, when you have to pay taxes, right? So part of the strategy is about enabling you to always pay your property taxes, because you're going to have your house paid off. And if you're not paying your property taxes, you can lose the property. So there are different kinds of gold and silver for different kinds of functions, and it depends on what you're trying to accomplish. So I'll just give you a couple of examples, but then I would say that what people really need to do is talk to the consultants, and so that they can get more specific to those specific needs. But for example, when I'm looking at the kind of barterable-ish gold, it refers back to either the fractional pre-33 gold coins or those foreign gold coins. And I like to use those for property taxes and things like that. So in that case, you would convert it into the new currency and you would pay your taxes with that. Other than that, I really like silver better for barterability. So if I needed to put a gallon of gas in my tank, or I needed to buy some strawberries or something like that, that's what I would use. Now, if you're working with a government agency on like taxes, you're going to have to convert it to whatever the current currency is. But if you're working locally with individuals, they really do get that they cannot replace what they're selling you because of hyperinflation that they're going to get you to pay for. So they would prefer, like we've seen in a number of countries, they would prefer to be paid in gold or silver. And they typically will have, okay, it's this much gold, this much silver, or this much paper or other currencies that they have a little more confidence in. So in those cases, you're actually going to use it directly. Okay. Now, there are some things that you might not want to like clip a little piece off of. There are other things that you would like to clip a little piece. You wouldn't care about clipping a little piece off. Like everybody's seen my sterling silver chopsticks, right? If I were to cut one of those, that wouldn't matter to me, right? So you want to have a variety of sizes as much as possible. And that's why I kind of like the pre-1964 dimes, quarters, half dollars, dollars, because then I have a variety of sizes. But keep in mind that anything that is gold or silver is monetary at its base, like those chopsticks, which are sterling silver, and that means they're 92.5% pure. So, you're going to be bartering with it in two different ways. You're either going to have to convert it into the current currency to pay it if it's a government agency, or anything that's associated with that they're going to require you to do that. Or individually, you're going to work with it directly, and people are going to prefer to be paid in gold and silver because at that point, they are well aware of the rapid devaluation of the currency.
Yeah. Learning how to barter is such a huge question because we are not a barter society.
That's actually not true. We barter for our work and we get paid in fiat money. And then we convert and barter with that fiat money for the goods and services that we need. So it's just that we've been taught to not think of it like that. But in reality, not only do we barter with the fiat money all the time, it's a tool of barter, but there's also growing barter communities, which is something that I do try and show you, right? So there are a lot more people bartering for goods and services with labor, with other things. Anything physical is barterable. Right? You have a cookie that's yummy and I have a glass. You need the glass to make the cookies and I need the cookies. Okay. We barter, we trade. So start looking at what you're doing, right? And when you use the credit card or you use cash or anything like that, you are bartering. How can you translate that into using the equivalent of gold and silver? Because once we hit hyperinflation, people understand how rapidly the currency is losing value, just like the high inflation that has gotten everybody up in arms, right? Oh, they have inflation under control. Oh, that just means the prices are rising a little less slowly. It's not under control.
How will I know when the time is right to convert my gold and silver into other assets?
Well, number one, if you watch my videos, you see I'm always talking about the different formations, but subscribe, right? I'm going to tell you what I'm doing, but pattern shifts and pattern foundations are really the key, because if you think about it, everything has a life cycle. And what I try and teach in my videos is where we are in that life cycle. It's like I'm 69. You're not going to think I'm going to be 8 like my granddaughter. And you're not going to look at her at 8 and think, oh, she's going to be 70 next year, right? So if you can learn how to recognize those patterns, which I talk about a lot in my videos and always have, then you're going to know that independently. But also, as long as I'm around and I'm planning on being here through this trend cycle, then I'll tell you when I'm making the shift.
Thank you. That would be very helpful.
Absolutely. Absolutely.
What do you think will be the first domino to fall?
Well, I'm not exactly sure what you mean by that question.
Well, the stock market, the housing market.
Well, I think the problem, I think we've already seen that domino, and I think it was in the regional banks and what's happening in the Treasury bond markets. So I think it's already happening. I don't think that I'm waiting for those dominoes to fall, which is why a lot of people have heard a lot more urgency. Okay, it's because I'm watching the dominoes fall. The problem is that those that are in the markets can see them, right? But the general public can't see them. And once the general public does see them, it's game over. Just think about 2008. Now you happened to be there in July of 2007 when I said something very nasty this way comes, because I saw technical signals, right?
Right.
And you all thought I was crazy.
Yeah,
oh,
a little bit of
this is the bird. Yeah. I mean, this is the best the economy's ever been. Blah, blah, blah. And I said, oh, something very nasty this way comes. So just because you, the public, don't see that, it's got to be covered up because they need you to remain vulnerable, right? They need you to, that's how they transfer your wealth their way. So I'm saying I've already seen the first dominoes fall. We saw it in the first quarter with SVB Bank and the regional banks. That issue is not over yet. We just recently had another bank failure. That issue ain't over yet. So yeah, they're falling. And I do not like what is happening in the 10-year Treasury market.
That was going to be my next question. Is that how they're suckering us to stay in the system, by giving us 5.5% interest or whatever it is on the Treasury bonds?
Well, are they? It's a double-edged sword. The 5.5% is because they are, quote unquote, fighting inflation, because the theory is you raise rates, fewer people borrow and spend, and that slows down the inflation rate. Well, it works if you're not at the very end of the trend cycle, but there's no purchasing power left. So the big problem with the Treasury market is that we're taught that is the largest and most liquid pool of assets. It ain't so liquid anymore. We started seeing cracks in that in 2015. So yes, I've been talking about this forever. But just because you can't see it doesn't mean it's not so. So the Treasury market has me very worried, because that is the foundation of the global financial system, and it is not liquid. And what I mean by that is those entities that hold large blocks of treasuries, they can no longer go in and sell a block and keep the price stable. They have to break it into itty bitty pieces so the markets can digest it and not dramatically move the price. But we are seeing price swings in treasuries that are like this. Is that the foundation that you want your house built on? If your foundation is moving like this, what do? Do you stay in that house, or do you get out? So that's what I'm saying. Get out. Get to safety.
Last question. When you talk about the strategy, you talk about what we need, how the strategy is going to help us survive and get through this economic chaos.
And thrive.
How do we know when the right time is to exit? And how does ITM help us with this exit strategy?
Well, a lot of this is about building a community and having long-term relationships. So the strategy is just based upon historic patterns. That's all it's based on. It's not rocket science. It's actually, I think, pretty simple to understand. And again, I go back to, what I try and teach in my videos are how to recognize those patterns and as things are shifting. So I intend to continue to do that. I mean, right now I have 3 studios. I have one in my home studio in Phoenix, one in my bug out location, so that if that's where I am, I'm going to be able to continue to come on air. The only reason why I would not come on air, honestly, is, I'm sorry, because a lot of people won't like to hear this, but if I'm unable to do it. Other than that, that's my commitment. I will show up and I will do the work, and I will do that as long as I am physically able to do that. And I will fight the central banks, and I will fight the garbage that they're trying to shove down our throats, because I have a lot of hopes. And I'm looking at all of the kids, not just my grandkids, but everybody's grandkids, their great grandkids, everybody in the future, and what is intended for us. And I don't like what I see. I don't like it at all. So this is my battle. This is my commitment. I don't plan on going anywhere until we're on the other side of this. And I do a lot to keep myself healthy and fit and keep my energy up and keep my mental clarity. So, I mean, my intention is to do this all the way through this mess.
So you will help us through your videos to see the vision, to see what is coming, and to be able to be in the right place at the right time with the right assets.
Exactly. Yeah. And I'll let you know. I mean, don't I always let you guys know what I'm doing for myself? I'm not going to stop doing that.
Thank you. I think you've answered most of the questions. I can't think of anything else.
Okay. So remember, if you haven't yet, hit that subscribe button so you know what's happening and what you need to do about it. And I'm so proud of the team that we put together with Daniela and Taylor. And wow, thank you very much. I mean, we're coming to the close of the year. It's crazy. But we are coming to the close of a year. What a year it's been. I knew this was going to be a very interesting year, and indeed it has. I can't say that I'm very excited to go into 2024. I think 2024 is going to be more challenging and more interesting than 2023. But remember, we are all in this together, and gold and silver is your wealth shield. And until next we meet, please be safe out there. Bye-bye.